All right. And you are listening to an episode of Transparency and Merit. This is JP. And I thought it would be good to kind of get into the stock market a little bit. It's not fun. It's not fun, but and it's not for everyone because right now is a weird time. Unemployment's at a crazy number. Despite what you hear, there's at least a couple 100,000 new unemployment claims every week, and there's a whole lot of people leaving their jobs and uncertainty, and that's just part of what we have to deal with. But for people who are putting money away, putting their whatever they have left over aside and investing, then it could be of some value. I don't know. But I just wanted to cover what happened because today was crazy. If you were watching the markets, they opened way in the red. And I've been saying for the last 2 weeks, if you come across dips in the market, especially a big one like 10% or so, then go ahead and buy. We've been reaching record highs for weeks. We were reaching record highs in the markets, and at the opening today, or at the close of Friday, it was people were panicked. Drudge Report was running. Their headline story is the markets, the bubble's exploding, and bubble continues to explode this morning. And but what I did know is that no matter what happened today in the market, Wednesday the Feds do a some sort of financial reporting and kind of like a state of the economy sort of thing. But also there's been rumors of interest rates going up. So in the face of inflation, another problem for just about everybody, that the interest rates and there's like this interest rate scare, and a lot of YouTubers are getting online, and a lot of them with major finance channels are kind of exploiting this the possibility here, and so they're yelling for big crash, and that's Drudge picked that up, and a lot of the mainstreamers are yelling, run for the hills. Eventually, you're going to run for the hills. There's no way around it. But we're going to have indicators, and I've talked about that before. The debt market, you need to keep your eyes on the debt market. Once that spirals out of control, it's going to mean that money is going to leave the stock market and go towards those other, whatever it is, wherever people want to put their money. It's not going to be in the dollar, though. And every day that we all sit on dollars, we have less buying power. And I don't know if it'll reverse. The Feds have given us some sort of weird timelines for next year, but I don't trust anything they say. I think it's all just smoke and mirrors. So in the meanwhile, even if you have a few bucks here and there, highly recommend that you get into some metals. Silver's 20 some odd dollars an ounce. Get a couple ounces. Get some silver. I've been yelling this since I started doing high finance a while back. Welcome to the show, whoever you may be. And we are just covering some of the most boring information on earth, if that's the case. Look, people are looking for some sort of security, whatever form that is. And so I'm reaching out into these markets, not derivative markets. I'm staying off of derivatives. I'm staying off of retail. Forget it. No way. but the energy sectors and oil may still have some upward momentum, but I'm just staying with high cap stocks, buying stocks that are paying me a dividend. And every time there's a dip, like today, the morning started with the markets down over 100 points. People were running, but there was a turnaround later in the day. And so in the morning, I felt that there was going to be a turnaround in the morning. And I've been saying, anyways, if there's any big dips, just buy. So I spent the morning buying, kind of beefed up on some of the stocks I've had. And then sure enough, the day ended up like 100 points or something. It was a real crazy day. And that's what we're seeing, a lot of volatility. And we're going to continue to see volatility. But like I said, the market's not going to blow up like they're being told until you see the debt market. There's going to be all these indicators that show risk levels go from right now, they're low to moderate, but there will be a time when it skyrockets 2 to 3 times what it's at now, and it'll be high or extreme levels, and you'll know to run for the hills. But yeah, that's just what I wanted to get into. That I saw it coming, and I've been telling people. I just hadn't done a show about it. And right now, you could still, the cryptos have been getting hit hard for now, like 2 weeks, 3 weeks. I'm not going to say buy, because cryptocurrency is extremely volatile, and it's not going to be for most people. But I just threw some money in there, and I threw some money at it, and that's where it's going to stay. So that's just a quick update on the finance, and then we'll get back to our shows with Brian ASAP. So thanks for